Phoenix real estate losing steam. We're going to talk about that today. On the last few updates, I've been talking about how we've been gaining momentum for the most part, and now it looks like there's some indications of us losing steam. So we're going to dive into that a little bit further today. But let's start with all of the economic news that came out last week, because if you were here last Monday, I was talking about how all of this news was going to happen. The Fed was going to meet. We were anticipating a lot of different things. So let's get into it. And if you're new here, thank you for joining us. I'm Caitlin McKegg. I'm a real estate broker here in Phoenix, Arizona. I always do these Monday market updates. So Fed approves hike that takes interest rates to highest level in more than 22 years. That sounds terrible. That is such a bad headline. That is so negative. That is so scary. But you know what? We know that's not scary because we knew that the Fed was going to increase another 25 basis points. That's exactly what they did. And as far as mortgage rates are concerned, it was really kind of baked into that already. It was anticipated. So this news isn't surprising and isn't scary, although that headline can look quite scary. So that's what happened last week. The quarter percentage point increase will bring the Fed funds rate to a target range of 5.25 to 5.5%, while policymakers indicated at the June meeting that 2 rate hikes are coming this year. Markets are pricing in better than even chance that there won't be any more moves this year. And Jerome Powell said the central bank will make data-driven decisions on a meeting-by-meeting basis. So that's what came out of the Fed meeting this week. Last week, we also got the GDP numbers. So this is something that I mentioned was going to be coming out as well. And the U.S. economy grew at a faster than expected pace in the second quarter of 2023, adding to signs that the threat of a recession has faded in the immediate term. Well, it depends on who you ask as far as that goes. But what happened is it grew at an annualized pace of 2.4% during this period, which is faster than consensus forecasts. They had expected it to grow at 1.8%. The reading came in higher than the first quarter GDP, which was revised up to 2%. So what does this mean? It sounds like it's good news, and it is good news that the economy's growing, but since the Fed is trying to tame inflation and slow everything down, this actually can kind of be bad news and impact markets in a negative way. So I'm going to talk more about that in a second. But the other thing we had coming out last week was the PCE, the Personal Consumption Expenditure. It's the Fed's preferred inflation measure. And this came out to show that prices are cooling in June. So that was good news. It grew 3% year over year in June, down from 3.8% the month prior, and in line with expectations. So that news that came out last week was positive. We were happy to hear that the PCE numbers were in line and also showing improvement in inflation, because that's what the Fed has been trying to achieve. This week, jobs data is going to come out on Friday. So what is expected is that the report on Friday should show employers boosted payrolls by 200,000 in July, unemployment held at a historically low 3.6%, and hourly pay cooled. So they're not expecting to see unemployment go up or down, about 200,000 in terms of payrolls added. And then as far as hourly pay and wages, they want to see that cooling, or that's what they're expecting to see. So depending on what those numbers are when that comes out, that can affect markets. And why do we care? Because that affects mortgage rates. So if you're in the market to buy a home right now, you want to keep a close eye on that, because those have been somewhat volatile, and it really impacts your payment. And if you're selling a house, you want to know what's up with mortgage rates, because you got to bring those buyers in. So let's talk about mortgage rates. What happened last week? Mortgage rates surge higher, but not because of yesterday's Fed rate hike. This was written on Thursday. But what ended up happening is rates actually went down a little bit on Wednesday afternoon when the Fed hiked the interest rate, because that was expected. Markets reacted favorably, or there wasn't much change there. But what had happened was, it talks about the Fed's rate hike was already baked into yesterday's rate levels. They moved lower in the afternoon, but they did get other data that was not weaker. So all four reports on this morning's scheduled economic reports came out stronger than expected. So as I was mentioning, the GDP report, some other economic reports, all of that came out and it puts upward pressure on rates. So in general, what this article is saying is that when there is good news for the economy and growth, when we know that the Fed is trying to slow all of that down, mortgage rates react in an unfavorable manner and typically go up. And so that's where we ended the week last week. So if you're in the market to buy right now, again, as I always say, check in with your lender if rates are very critical for you at the moment, because things may have changed on Friday. But again, by the time I'm posting this on Monday afternoon, things could have changed again. So just, if you have a good lender, they'll be touching base with you if there's any serious movement going on. Now, I know I said that things are losing steam in the real estate market, but this is an article talking about more home buyers got lucky in June despite persistent inventory challenges. Now, this is looking at the real estate market from a national standpoint, so this isn't Phoenix specific, but it talks about how the pending home sales index increased in June and actually saw more homes go under contract in the resale market, which is lacking in inventory for the most part. So NAR, the index of pending home sales rose 0.3% to 76.8 reading in June. I mean, that's not a huge increase, but it is an increase. It's higher than both the 2.7% drop in May and the 0.5% decline they had estimated. So either way, they were estimating a decline and they saw some growth. On a yearly basis, pending transactions were down by 15.6%. So all in all, we're still down compared to last year in terms of number of transactions, but they did see an increase. And so that just shows that more buyers have gone out there and gotten homes under contract. A leading sign of the housing market's health underscores the still tepid activity in the resale market due to a lack of inventory, as many rate-conscious homeowners are reluctant to sell. That's left buyers in fierce competition. So again, this is on a national standpoint, but this is something to watch. As they mentioned, it's a leading indicator. So if that continues to increase, then we expect to see the market being pretty healthy as we continue in that way. But we're not seeing that quite as much here in Phoenix. So let's talk about what's going on in Phoenix. And if any of this information is valuable to you, consider subscribing. I would love for you to be part of this community and hit that like button if you're enjoying this video. So if you're not here every week, this is the Cromford Market Index, which I'm a subscriber to. They have this index where they it's another leading indicator of where the market's going based on supply and demand. And this is focused only on resale homes. This is not considering new construction. And I do have a point about new construction in a minute. So just keep that in the back of your brain for now. So the market index, anything over 110 is considered a seller's market, and we're at 161.5. Roughly the same number as where we were at last Monday. So not a whole lot of change as far as this goes. Our demand index is 78.2. So with 100 being kind of that normal range, we're seeing demand down by about 22%. And then supply is at 48.4. Again, with 100 being normal, we're down about 52-ish% on supply. So we've got supply that's lower than demand, which then increases this overall index. And again, anything over 110 is a seller's market. So we're in this very weak seller's market, but we haven't seen much change. Demand has gone down a little bit and supply has stayed pretty low. And again, last week, I don't remember the exact number, but it was somewhere around 161 or 162. So not huge movement between last week and this week. Still kind of chugging along. But let's look at every city because each city is a little bit different. You might notice there are more red arrows on this than there were last week. If you are new here, the arrows are indication of positive or negative changes for sellers. So the green arrow means that the CMI improved for sellers month over month, and the red means it deteriorated for sellers over the last month. Chandler is still leading the pack at 325 CMI. Remember, the CMI for the whole valley is 161. So Chandler is much hotter. So if you're a buyer in Chandler, keep that in mind, because you're probably going to see multiple offers depending on the price range you're looking at. And if you're a seller, it's good news for you. And it seems like that's been increasing month over month. But the biggest thing that we've seen here is the average change month over month with all of these cities increased in a negative way. So I think it's been the last 3 weeks we've seen a negative change when you average all of these cities. And this week we saw 5.9%, negative 5.9%, which is more than last week, which was negative 5.3%. So not a huge difference, but still that's about 3 weeks of a trend now. We're starting to see this negative. It could have been 4 weeks. I'm not sure if it's 3 or 4, but regardless, we're seeing every week a negative change on average with all of these cities. So this being a leading indicator, this tells us that we're starting to lose some steam here. Now, is it related to rates? Is it related to the season? I don't know. Or is this something that's going to stick around? We're going to have to keep our eye out. But those are things you should think about if you're thinking about buying, thinking about selling. That's kind of where we stand right now. Only 5 cities show a positive change right now from this time to last month. So those are those green arrows there. And 12 are negative trends for sellers. Tempe, Fountain Hills, Avondale, Glendale, and Peoria saw the biggest changes in a negative way for sellers. So depending on where you're at, hopefully that's helpful information for you. But again, all of this is for resale listings, and the new home market is actually behaving a little bit differently. New homes are actually increasing in price. There's pretty strong demand in the new home sector. So that's a whole different ballgame compared to what we're seeing on the resale side. And home builders are kind of taking that and running with it. They're building a lot and continuing to build for that demand. Resale, we are not seeing a whole lot of new inventory coming up, and the demand seems to be kind of fading a little bit. And I can understand if you're in the market for a home and you're sick of looking through inventory that doesn't meet your needs, and you're already willing to pay what you need to pay for a monthly payment based on the mortgage rates, new homes might be the way to go, because at least you know you can get everything you want or close to it. So that's kind of the biggest difference right now between resale. So although we're losing steam as we look at resale, new homes still seem to be fairly strong. One other factor I wanted to share, and another leading indicator that is showing us we're losing some steam, is the listing success rate. So you can understand what that means, how successful homes are in selling, closing after they're listed. And this here, the pink line is 2023. This is the first time we've been below 80% since April. So we gained a lot of strength this spring. Now we're starting to come down. The yellow line is 2022, and last summer we had a surge of inventory, we had a drop in demand, and this kind of came down very low to some of the lowest levels we've seen in many years. And 2021, it remained really strong up there in the 90% range. So, we're not as bad as we were last year, but we're trending downward on this listing success rate. So if you've been thinking about selling, keep that in mind. We're below 80% as far as listing success. And if you are thinking about buying, you may have a little bit more of an advantage if this continues to go downward. So that's where we're at today as far as the Phoenix market goes. We've got some news coming this week in terms of the economy, so keep an ear out for that. And on Friday, I'll be back with another video. If you guys have any questions or thinking about buying, selling, investing, check the description below. You can reach out to the team directly, or you can use some of those links to get an instant home value or search our MLS for homes for sale here in Phoenix. So thanks for joining me, you guys. I will be back on Friday with another video. So have a great week. I'm Caitlin McKeag with the Desert Dreamers team.